What's going on, everybody? I'm going to give people a chance to hop in real quick. It's just going to be a hangout, but we got a lot of incredible information on why AMC is down this week, what's going on with the cost to borrow, the short interest, through the roof, just bonkers. You know what? We're going to hang out for a little while. It's going to be a super casual stream. If you're watching this after the fact, guarantee you're going to appreciate the information that you get here. What's up, Buzz? It's good to see you, brother. What's going on, Andrew, Freddie? It's good to see everybody. Welcome. This is a totally impromptu stream. Nobody knows, or it's not pre-scheduled. Nobody knows that it was planned. So let's just give people a moment to hop in here. I guess we're going to start doing these every week. I think a weekly recap is really important here, especially with everything that happened this week. So people are kind of surprised as AMC is down so far. However, it's almost exactly what I expected. Last week we saw a big run up on AMC's price from I think $4.80 or so up to $8.90 in after hours on Friday. And I'll explain. I'll just tell you this: the FTD, the failure to deliver rollover game, is real. It was still insufficient in bringing AMC off of the Reg Show threshold securities list. For those of you that are unaware, the Reg Show threshold securities list, when a stock has a significant number of failures to deliver for 13 days in a row, it gets put on this list. And when it is there, it becomes illegal due to the Dodd-Frank regulations to actually short it on a downtick. An uptick in price and a downtick in price, if you understand if you're following what I'm saying. However, that's easily avoided by marking a short position or a short sale as short exempt. So a short exempt can do just that. Even though AMC's been on the Reg Show threshold securities list now for 24 days in a row. 24 days in a row. That's not including the 13 days it took to get on there. So 13 days for the FTDs plus 23 more. And shorts can market makers can manipulate short positions by selling shorts and naked shorts via exemption. The exemption allows them to sell them on the downtick. This creates a reduction in price. It is an artificial reduction based on short pressure. What's up, Nantucket Bay Scallops? I guess he's tired. He says, Je suis fatigue. Edward Britchick says, Ken Griffin to the prison is the floor. God damn. Pardon my French, ladies and gentlemen. But let's hop in here. We'll go over here to my Twitter. Real quick, I would like to say thank you to all of you here on YouTube and Twitter for tagging Twitter support and Elon Musk and helping me to get my Twitter account back. We are now officially back on Twitter thanks to you and your support because we were wrongfully suspended. YouTube had claimed that we were inciting violence, but after numerous appeals on my part and thousands and thousands of people retweeting and liking and sharing every single day, you guys managed to get Twitter's attention and to get Elon's attention, and we are now back on Twitter, baby. You got it right. We called for child pedophile rapist police officer that was convicted by the DOJ to be hanged in the streets, and we were suspended. However, I wasn't telling people to hang him. I wasn't telling you to hang him. I wasn't saying we should hang him. I was telling the DOJ to hang him in the streets for being a piece of shit and stealing that kid's innocence and life away from them by molesting them and raping them. Therefore, I think it's a very fitting punishment, capital punishment, that he be hanged in the streets by the Department of Justice. This would directly deter violence against children in hopes, and I wish other pedophiles would take note of the things that happen to them, but that's probably not going to be the case. However, I will be happy to see prison justice be doled out in that situation. Tammy, Andrew, Brian say, I agree. Cheers. 100%. Corinne, Jana, you guys are amazing. Thanks again, you guys. You know what? Hey, let's share this shit on Twitter real quick. You know what? Let's go to YouTube. Click this fucking stream. Share this shit on Twitter real quick. Where's it at? Oh, thanks. I give hearts too. Fuck it. Andrew says Sound of Freedom is amazing. That's awesome, bro. Glad you went to go check it out. Why is AMC down this week? Oh, it's elementary, my friends. All right. Now, we've got that out of the way. Let's scroll down to earlier this week. You guys are not going to believe the bullshit the hedgies are coming out with. It is intense. It's really hilarious, to be honest with you. And I'll open that one and I'll save that one for later, because that's a fun one too. All right, if you're unaware, the judge in the case between Allegheny and AMC has declined the settlement. And once the settlement was denied, on Friday, and after hours, institutions, hedge funds and market makers started selling APE. Actually, they did a smash and grab on APE. Let's put it this way. They sold APE heavily to hit all those stop losses. They hit a ton of stop losses all the way down to 67 cents. And then they brought the price right back up to $1.80 within a matter of 2 hours. So APE went from $1.90 to 67 cents back to $1.80, $1.85 within about 2 to 2.5 hours, because it was an institutional smash and grab. They wanted your APE shares, they wanted to trigger your stop limits, and they went after it. At the same time, they used that news from the judge in order to run up AMC to $9 by returning millions and millions of shares. They returned over 30 million shares. And what that allowed them to do was to bring the cost to borrow from 1,000% plus average cost to borrow to around 400% average cost to borrow. But if you're new to the stock market or you're not aware of this, anything over 20% cost to borrow is considered high. Anything over 50% is considered unheard of. Anything over 100% is considered astronomical. They were at 1,000%. And out of sheer desperation, they returned. They moved the stock price of AMC from $4.80 up to $8.94 or so by buying and selling many AMC shares, tens of millions of AMC shares, to the point where almost a fourth of the entire float was sold in that one day. But I'll start here. Why is AMC down? Ladies and gentlemen, it's because short interest is through the roof. All right, let me scoot this over here. Short interest is now higher than it has been in a long time. Higher than ever, actually. 29% on AMC. I'm going to move this over, actually. Let's get this out of the way. So, the estimated free float short interest by Ortex and Stonko Tractor are over 28 to 29% now, depending on which one you look at. 87.5 million shares were sold in one day. Okay, take a quick look at this, guys. I know this might be a little small on your screen, but 7/24 was Monday. And in order for them to get the price back down from $8 and change to the current price of around $5, They sold 87,670,825 shares worth of short volume in one day. Of those, 2,600,000 almost were off exchange exempt from the actual Dodd-Frank regulations. This means 2.6 million shares were sold short while the price was going down. This allowed them to do what? Bring the price down. So you take a look at all this other volume here. Lots of shares. 6 million sold short, 7 million, 10.9 million, 20 million on 622. And that's a lot. To the point where if you look at the total volume reported that day, including longs and shorts, was 167 million volume. And this wasn't retail investors buying or selling. You could tell from the OBV. The OBV is part of a chart and stands for on balance volume. It remains extremely elevated. That means the majority of retail investors have not sold their shares. The 167 million shares were likely the same shares recycled and cycled over and over and over again between one hedge fund to another and another institution and so on, traded via dark pools. The majority of it, over 70.8 million shares were traded off exchange. That means in the dark pools. So they could trade 70.854 million shares via dark pools and over-the-counter trades amongst themselves for purchases to prevent the price from going up. And then they could sell 87.670 million shares on exchange in order to make the price go down. In addition, while the price is already going down, they could sell 2.6 million shares off exchange exempt. That means that they could sell them short exempt while the price is going down to help further push the price down. These are absolutely astronomical numbers. The entire AMC float is only 513 million shares or so, give or take. So out of 513 million shares that one day, 167 million were traded, 87.6 million were traded short, and 2.6 million were traded short exempt. And what this means is, there's multiple things this means. This is using arbitrage, buying and selling securities in different markets to take advantage of differences in prices available in each market. And that's what we're talking about. You could trade them on the New York Stock Exchange for sell orders in order to make the price go down, and buy them via dark pools or over the counter in order to keep the price from going up, etc. In addition, AMC short interest exceeds 29% as these 87.5 million shares have been shorted many of them via exemptions on the downtick, even though AMC remains on the Reg Show threshold securities list, which makes shorting on downticks illegal. A short exempt is used for listed equity securities. It is a special trading situation where a short sale is allowed on a minus tick. Minus tick, down tick, same thing. The owners of a convertible trading at parity can sell the equivalent amount of common stock short on a minus tick, assuming they have the firm intention to convert. So you see, this literally means that they don't have to have the shares. They just have to have the firm intention to convert. It's really that simple, ladies and gentlemen. These are the markets on which we trade. And this shows me exactly where we stand. That I've been right all along. Many people have been right all along. The due diligence that occurs on a daily basis by this community is amazing. Because a stock does not get to 29% short interest unless it is very, very heavily shorted. And with 3.8 million American retail shareholders, not including others around the world, that own 85% of the entire float, well, my friends, that makes when Porsche owned 55% of the float of Volkswagen look like chump change, doesn't it? That's exactly what it is. Retail owns almost the entire float of AMC. So for 167 million out of 516 million shares to be traded on Monday, that literally means that a shitload of these had to have been synthetic shares, and the same shares traded over and over and over again in order to spoof the price further down. Speaking of Volkswagen, I have never expected the AMC price to skyrocket until an actual stock market crash or massive liquidity situation occurs, similar to the margin calls that happened in 2008 when Volkswagen owned 55% of the float. Currently, retail investors own over 85% of the float of AMC. Volkswagen had about 15% short interest. AMC is at 29% short interest. And remember, that short interest is self-reported by the market makers and the hedge funds and the family offices and the prime brokers and the broker dealers and so on. It is self-reported. They have to physically mark a long asset as a short sale by pushing a button on the keyboard. If they do not do that, it literally remains on their books as an asset instead of a liability. Therefore, they're literally cooking the books when they do this. Hey, I'd like to say a huge shout out to Phil for Real and Pantheon. If you're not subscribed to them on YouTube now, what the hell are you waiting for? Look up Pantheon AMC. Look up Phil for Real. And give them a follow. Give them a subscribe. I think you're going to enjoy the positivity and their factual information. Now, a conversion and a reverse split does not make me think that it's going to be a MOAS or a mother of all short squeeze situations. A conversion or reverse split and AMC issuing shares on the open market, however, does lead me to believe that there's a very good chance of a stock price going up significantly in AMC, because the last two times that AMC issued shares was in January of 2021 when AMC went from about $1 a share to $13 a share, and then the time after that was in May and June of 2021 when AMC went from $10 a share to $79 a share during intraday trading. When that occurred, both times AMC was selling shares on the open market. And both times, when AMC was done selling shares on the open market, the stock price began to go down. Coincidence? I don't know. You know what they say, that past performance is not indicative of future returns, and that is correct. However, I'm inclined to think that this is not coincidental whatsoever. Not in any way at all. And what happened with Volkswagen going from on 15% short interest with 55% of the float owned by Porsche going from, a few dollars a share, $20 a share to $1,000 a share, in my opinion, will pale in comparison to what happens with AMC. Because Volkswagen literally ran to $1,000 a share 30 days after the September 27th, 2008 stock market crash, the worst single day in S&P 500 history, where the S&P 500 lost around 13.5% of its entire value in one day. Almost exactly 30 days later, with the situation I just said, Volkswagen ran up to $1,000 a share. Porsche cut a deal with the Italian government, the American government, and the short hedge funds in order to allow the hedge funds to pay them their money without going completely insolvent. However, that's not possible when you've got 4 million retail shareholders, is it? All right, Edward, you sent me a Twitter DM showcasing AMC being manipulated against crime. I'll check that out real shortly here. Let me go over here and I'll actually pop it open on another screen so people can't see the other messages. Let's pop it up over here. Let's see the stocks being traded against each other. I always love this. I always love seeing it with my own two eyes. It just shows me just how desperate these fucking cucks really are. Oh, good, a video. Oh, even better. Okay, pictures. Check it out. AMC and Ape. Ladies and gentlemen, what you're seeing here is a clear indication to me of swaps. Swaps on AMC and Ape being used in the derivatives market to trade AMC and Ape against each other. And right here you can see This is exactly what I was just talking about when we started the video. Within a matter of hours, APE was traded from $1.80 down to 67 cents in a matter of minutes, and then back up to $1.48 in that same day, just in after hours on Monday. Friday. This was on Friday, and this occurred in order for them to hit all those stop losses and buy up all those shares from the paper-handed bitches that put in their APE orders as stop limit orders, etc. Then they got a bunch of extra shares on their hands and were able to bring the price right back up to $1.48 where it needed to be. AMC was moved from $4.35 all the way up to $8.76, and this would allow them to return 32 million shares in order to reduce the cost to borrow from 1,000% to 400%. Ladies and gentlemen, if you're so desperate as to take your mortgage from a 1,000% APR to 400% APR, you're already fucked. Could you imagine? You got a 3% mortgage, and then all of a sudden, over a couple weeks, it goes up to 1,000% APR. How much is your monthly payment going to be? It's going to be fucking astronomical. So what these guys did, their cost to borrow was astronomical. They used the news from the judge in order to buy these. Buy the close out the failures to deliver on AMC, and then short it down in order to bring the price down, and then do a smash and grab on APE, AMC's preferred equity, to go stop loss hunting. So they went stop loss hunting on APE. They closed out FTDs on AMC in order to bring the cost to borrow down, and then they shorted it some more now that the cost to borrow is in the 400% range. Very good point, Edward Britchick. Make sure you guys follow him on Twitter as well. He's a good friend. We met through this awesome movement, and I'm always enjoying the kind of tweets that you put out, brother. Keep it up. Keep it coming, Edward. I always appreciate that. Let me close this shit out. Let's go. You guys want some more? I'm about to drop some more knowledge on you right here. This might fuck you up a little bit. TD Ameritrade today decided to hold a Twitter space call about AMC. Remember the Bartlett warehouse fire that you guys may or may not have seen me go to personally in my pickup truck and film. Meanwhile, they were cleaning up the debris that was still burning 26 days after the fire occurred, because the magical boxes in this warehouse magically seemed to fall upwards to destroy the sprinkler system that's on the ceiling. Yes, ladies and gentlemen, the actual report from the fire, from the lead forensic investigator, stated that the racks and boxes fell, destroying the sprinkler system, the one that's on the roof. Or excuse me, not on the roof, on the ceiling. But you get my point. Doesn't make much sense, does it? No, it doesn't at all. This was taken February 4th. That was the second day of the fire. So apparently the first day was on February 3rd. I was there at the end of February, and that shit was in rubble, still on fire. Why? Because it wasn't made just from burning papers. The only thing that burns like that is thermite. The same kind of thermite that was used on September the 11th. Let that sink in. What material can burn for 30 days and not be extinguished by dousing tens of thousands or hundreds of thousands of gallons of water on it? Thermite. So TD Ameritrade today decided to do a space call on AMC at 11 a.m. this morning, and I purposely did not go to it because I didn't want to give them the blessing of my presence. And as I told you guys here just a bit ago, earlier this week, I expected AMC would be shorted and manipulated to under $5 by Friday, which is tomorrow, because Max Payne is at $5. And as a matter of fact, I believe now Max Payne's at $4.50. So this is not financial advice. I'm not a financial advisor. but max pain for this week is at $4.50. Therefore, I wouldn't be surprised to see AMC stock close at exactly $4.50 on Friday at market close. Hedge funds are desperately trying to keep these call contracts out of the money in order to prevent themselves from losing control of AMC, because it's the most dangerous, most overly shorted, heavily held by retail investors stock on the market, as broker dealers need to delta hedge for the increase in price if the stock closes above $5 on Friday. AMC's short interest is over 29%, and over 40 million shares were returned to reduce that cost to borrow from 1,000% to 400%. 87.6 million shares on Monday alone were sold short in one day to maneuver the price downwards. In addition, 2.6 million more were sold short off exchange via short exemptions in order to avoid Dodd-Frank regulations. Now, even the APE cost to borrow and utilization is beginning to shoot upwards because APE is also being shorted more heavily. Meanwhile, Chancellor Zern is deliberating on the revised APE to AMC conversion. And tomorrow is Friday. Tomorrow, Zern's schedule is clear. Last Friday, Judge Zern issued the initial rejection of the settlement proposal. And on Saturday, this past Saturday, Adam Aaron and AMC and Allegheny, the plaintiff, issued a revised settlement proposal to the judge. And on the weekend, Adam Aaron released a statement to retail investors indicating the importance of the reverse split and the conversion and the issuance of shares. That is why he did it. He didn't do it to satisfy you. He didn't do it to make the stock squeeze. He didn't do it to stop the stock from squeezing. He did it for legal purposes. By law, Adam Aaron and AMC and Allegheny, in order to proceed with their settlement, had to submit a new proposal. And that proposal to the courts also included an open letter to retail investors, holders of AMC stock. So, this week, Friday, the 28th of July, Chancellor Zern has a day. It's not a day off. She just has nothing on her calendar. So she's probably still working. Most likely, she has the opportunity to deliberate on the proposal. We may just get an answer on the revised settlement, which does not release APE claims. They changed the settlement to not release the APE claims, the ability for APE shareholders to submit a lawsuit, because the AMC stockholders that does not have anything to do with AMC stockholders. That's just the APE, and it would dilute APE positions slightly for AMC to issue the share settlement. Okay, so to put it simply, the proposal has been revised, and any day from now on, the judge could issue her decision. And it's likely that she does this because she specifically asked AMC to advise if there was urgency in it, and AMC did. Adam Aaron and AMC said that they want a response, a decision on this lawsuit by end of July or early August at the latest. The judge has accepted the proposal and is reviewing it. And we will see if it becomes fully accepted in the courts or if it becomes rejected once again. I'm on the wrong one. There we go. Now, regarding this lawsuit, the same lawsuit we're talking about here, the judge has said that opportunistic petitioners must post a meaningful bond for a stay of appeal. And AMC is arguing that if you want to block us from raising capital by selling, by issuing shares on the market, which means selling shares of AMC after the conversion and reverse split, if you want to block us from raising capital in this way, we calculate that your bond as the plaintiff for the damages you will cause us would be over $100 million per quarter. So now this broke bitch that's trying to sue AMC, named Miss Izzo, she would be required to post a $100 million bond every quarter, every single quarter, if the delay imposed, if there's a delay imposed by a stay on the settlement approval. So the primary purpose of the bond is to protect the appellee, which is AMC, from losing the benefit of the judgment through the delay imposed by a stay. So Izzo wants to fuck around and find out and have a delay imposed by staying the approval of this conversion and reverse split and issuance of shares, then they would have to pose a $100 million per quarter bond. And when the judge, if and when the judge were to basically say that, okay, you're wrong, AMC's taking damages, now all these bonds are going to go to AMC. AMC would make all those hundreds of millions of dollars. So if those suing AMC theaters would like to prevent them from issuing shares, AMC argues they must first post that $100 million bond per quarter, from which the courts could then draw from in order to compensate AMC should the judge rule in favor of AMC, which she probably will. And a supersedious bond, for those of you that are unaware, often shortened to just called a supersedious, is also known as a defendant's appeal bond. And it is a type of surety bond that a court requires from an appellant who wants to delay a payment of a judgment until an appeal is over. This is a feature of common law, and in particular, the American legal system. It is very, very common. Therefore, it's not looking good for Izzo, it's not looking good for Allegheny, it's not looking good for the shorts whatsoever. Somebody was asking me, who's writing that bond? This has like a 1% chance of winning on appeal, and nobody will be a part of that bond. And you know what? I have experience with other kinds of bonds, such as surety bonds. And I'll tell you this, that I have a logistics company who is a third-party logistics company. We're a freight brokerage. And in order to be a freight broker, you need a $75,000 surety bond or $75,000 in an equity account held in a trust, basically, by the insurance company. So either you need $75,000 in cash, or you need to pay 10% of the total bond, which is $7,500 plus fees every single year. So if Izzo really wanted to do this and didn't have $100 million, she could then pay 10% of the $100 million, which would be $10 million per quarter, to an insurance company in order to get a supersedious bond from that insurance company. However, there's no insurance company in their right mind in the world that is going to take more than 10 seconds to look at this case, realize what's going on here, and deny their application for a bond. In addition, it would still cost them $10 million per quarter. And then if the judge rules in favor of AMC, the insurance company would have to pay out $100 million plus for each quarter that the stay on motion, the stay on the case was approved after the fact. So it could potentially be hundreds and hundreds of millions of dollars losses for any insurance company. No one's going to fucking do that. No one. Munesh, I read your question there, but I don't know how to answer it. I don't think that... I don't understand what you're trying to ask me, to be honest with you, because it's not really a full sentence. What shares are you talking about? Supreme Omelette, no, they don't pay less than $100 million. I can't tell you how much shorts pay to borrow. I can tell you that the cost to borrow is astronomical, and it's APR, but even still, think of it, if your cost to borrow on your mortgage goes up from 3% to 1,000%, that shit hurts. Now, minor correction here. It's not the Central Bank of Canada, but the National Bank of Canada has just increased their position in shares of AMC from previous 300,000 shares to over 3.2 million shares. These shares can be lent out at that 400% cost to borrow to short hedge funds and family offices, and they can make money off of it. In addition, they're hedged via an additional 47.5 thousand put contracts. That's what hedge funds and institutions do. They go long and they go short. This is called a hedge. If the price goes down, which I bet you they expect it to because they know that it's going to hit max pain at $4.50 a share, they can sell some of their 47.5 million put contracts and take a profit. When the price of AMC goes up, as it inevitably will, especially during the APE to AMC conversion, reverse split, and issuance of shares on the open market, just like it did the last two times in January and June of 2021, stock price goes up. National Bank of Canada can sell their 3.2 million shares for whatever fucking price they want. In addition, those shares would have to be recalled from the shorts in order to sell them, further causing delta hedging, calls going in the money, gamma squeezing, FOMO buying, etc. And here's the numbers so you can see I'm not full of shit. They have 43.7 thousand puts, and they increased their shares to 3.225 million shares as well, which is a pretty hefty increase. 35,000 additional puts, but they already had around 12,500 puts before this. But they heavily. So this is about a 300% increase in the number of puts that they have. However, this is a 3 million% increase on the number of shares they had, because they only had a handful of shares at the time. They now have 3,225,000, and previously they had around 212,000. So that's a massive increase in the number of long positions that they have taken via the National Bank of Canada. Huge shout out to Crystal Ball 93 on Twitter. Thanks for posting that up, my friend. Yeah, I don't know who this Ant guy is, but if you want to watch Ant-Man, it's a Marvel movie. You should go check it out. You keep asking about him, though. Mods, just ban him. I don't give a shit about Ant-Man. There has been a new frivolous lawsuit issued against AMC. Now, at first I thought it was the fake the lawsuit against AMC Networks, which is the streaming service, aka the cable news channel, from February of this year by Market Watch, but it was not. It is a real lawsuit, but that doesn't mean that they have a chance of winning. Some nobody, these two girls basically, are claiming that AMC has broken the law by sharing their browser's cookie information with Facebook when they bought movie tickets online. It's absolute nonsense. It's absolute bullshit. Companies are allowed to sell their information and use the cookies in any way that they please, especially if you click the accept cookies button. And if you click deny cookies, you usually cannot use the website anyway. This is standard practice amongst every single website you've ever visited in your life. Not all of them do it, but it is still standard practice at most major companies, even some smaller ones, will sell your cookies and your private information if you allow them to, if you accept the terms and conditions. But even still, it's absolute rubbish, because there's no reason why Facebook would have your name or address or that kind of thing simply from the browser cookies being shared, if that were even to be the case. Any web developer would be able to look into the code, the web code, and the HTML for AMC theaters and figure out if this was something that was programmed to occur, which in my opinion, and in my guess, for those of you that don't know, I previously was a networks engineer for a company called Advanced Technology Consulting out of Elmhurst, Illinois, for multiple years. And that's not something that's really possible or plausible in any realistic terms whatsoever. I don't think that AMC was doing that. And if they were, well, you're shit out of luck, because you already clicked the acceptance of terms on the terms and conditions of the button you selected before you even entered the website to purchase your movie tickets. So regardless whether AMC had done this or not, it doesn't really matter because they probably had permission to do so if they did. Shorts are absolutely desperate. However, I do not believe that this will affect AMC or the conversion or the reverse split in any way. It's not a lawsuit that could hold up AMC in court and prevent the issuance of shares. It is simply another frivolous lawsuit in order to dissuade new investors from joining and buying into AMC stock. Seasoned investors such as myself, possibly such as yourselves, understand what's going on here and look at it and go, that ain't shit. No big deal. It's obviously a frivolous lawsuit and it's not going to affect us in any way. But shorts are literally trying everything they can to smear AMC's reputation in order and to prevent new investors from piling in. D, have a great night. I know it's late, my friend. It's 1 a.m. in Eastern time, so you have yourself a great night. I'll catch you guys tomorrow if you're around. See you in the think tank, buddy. So here are further details. It was filed by last name Bretto, I think like Jessica Bretto or something like that, et al. Versus AMC Entertainment Holdings in the U.S. District of Kansas. AMC Theaters was hit with a digital privacy class action on Wednesday in Kansas District Court. The suit, filed by Berger, Montague, and blah, 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 accuses the defendant of disclosing info about moviegoers' ticket purchases to Facebook in violation of the Video Privacy Protection Act. Counsel have not yet appeared for the defendants. The case is this. So it is an actual lawsuit, but anybody can sue anyone for anything at all. I could sue you because I don't like the color of your hair. You could sue me for any little thing in the world. But that doesn't mean that it will actually be a winning case. The plaintiffs are Jasmine Bretto and Naomi Kopinski, named here at the bottom. Jasmine Bretto and Naomi Kopinski. Entered on 7/19 of 2023. So this was entered almost 9 days ago. 9 days ago at this point. But just today, MarketWatch is coming out with articles to talk shit about AMC, to give a reason for them to short it further and to make people think that that's the actual reason why it was shorted, which it's not. Or so why the stock price went down. We all know that that's not why the stock price went down, because the on-balance volume doesn't fucking lie. Michael Pacheco, I'm sorry, my friend, I do not offer financial advice. That's not what this channel is about. This channel is about education and entertainment. But I will tell you that Goldman Sachs issued a price target of 175. Goldman Sachs AMC price target. Now that's not something I'm suggesting in any way. But Goldman Sachs has raised their price target of AMC to $175. And this is factual. On July 25th, Goldman Sachs Group increased its price target from 160 to 175 in a research report that it sent to investors this last Monday. Goldman Sachs Group currently has a buy rating on the stock. I'm not surprised. Several other short companies like Citigroup have a sell rating on shares of AMC. Which is not surprising whatsoever, because Citigroup is heavily short on AMC, as are many of the hedge funds for which they act as a prime broker. But at $175 a share, I think I'll just barely be licking my ice cream before it melts. Just barely. But yeah, I'm holding for way higher numbers than that personally. Oh, what's up, Angelina, Mike, Hilsey? It's good to see all you guys. Appreciate you. Yeah, big news on BBIG. Just so you guys know, this might be bad news for some of you guys, but BBIG is being delisted. And now, don't It's being delisted from the NASDAQ, so don't panic. All right? I wouldn't say panic, but... And FINRA. They are suspended. BBIG is suspended, but I know that even after it was suspended, Vinco, there it is, Vinco Ventures. BBIG has been suspended as of 7/28 for regulatory slash non-compliance. But as you can see, many companies are suspended from regulatory or non-compliance fairly often. I would be more concerned if it said liquidation. This could just mean that they're being moved from the NASDAQ to the OTC, which would make it a pink sheet stock. However, it's not a price issue, but it is a compliance issue. So, in theory, in the morning, BBIG might possibly be able to file the paperwork or whatever it is that they need to do to come back into compliance. So, this is directly from listingcenter.nasdaq.com. You can see that Vinco Ventures, BBIG, is listed as suspended for regulatory noncompliance. And I believe it will be delisted from the NASDAQ in the morning in pre-market, and it will be moved to the OTC. OTC is not great. There's a lot of fuckery that occurs on pink sheets. So that's not great news. I'm hoping that they do get moved to the NASDAQ, but I'm personally, as I've told you guys before, I'm personally not invested in BBIG anymore as I was in the past. Long time ago, I told you guys that I sold my BBIG position because I was not happy with the way that management was doing things. A lot of drama there. A lot of drama. But that doesn't mean that I may not still buy into BBIG. Shit, I may do it tomorrow. I'm not sure. I just know that I'm watching it, and I'm kind of sitting on the sidelines to see what happens with their management positions in BBIG and the stock itself. All right, enough of that. Thoughts on BBBYQ? Man, this is a dangerous one here. I could talk about BBBYQ for hours, but let's put it simply. There's a possibility that they come out of this bankrupt stronger with fewer stores and really good numbers, and that would potentially cause a short squeeze. There's also a possibility that that does not occur, but as of right now, it looks like some major institutions, I believe like Overstock and a couple others, are throwing big bucks at BBBYQ. So that might be the case. I bought more shares since I posted this tweet. When at the time I had 10,000 shares of APE. I think I bought another 1,000 or so. I've got 11,000 of that in this one account. AMC, I had 6,000 shares. I think I bought more of those too. I think I have like 6,100 in that account. And I've got a couple other broker dealers in which I have long positions as well. Mainly hundreds and hundreds and hundreds of call contracts on AMC and AMC1, which AMC1 entitles me to 100 shares of AMC and 100 shares of APE. For those of you that are unaware, the AMC1s are considered adjusted options. Now, Gary Gensler was going to implement the Short Sale Transparency Act, and all of these pieces of shit all these representatives voted against the Short Sale Transparency Act. You know who else was against it? Hester Pierce. Hester Pierce directly spoke out against the Transparency Act and fought against it while it was up for a vote here by our government, basically, our representatives. This is why they want Gary Gensler out of office. He's endangering their criminal enterprise of market manipulation and insider trading by trying to implement the Short Sale Transparency Act, which would force hedge funds to disclose their short positions over $10 million every single day. Currently, I think they only have to report twice a month. Twice a month. Yep, that's correct. That's, my friends, is why I don't think that Gary Gensler is the best person to be the head of the chair of the SEC, but he's also not the worst person. That could be Hester Pierce, who would probably take his place along with the rest of the board members if Gary Gensler was removed from office. So I do not think that that would be a great idea. Gold and silver does look really good, man. Gold and silver prices are looking nice and cheap. There's been a good retracement. People are thinking that the equities markets and the stock markets are going up, which, yeah, they have gone up, but they're thinking that we're going to new all-time highs. And while that just might happen, I don't really think, well, let's put it this way. I think that this bull run is not an actual bull market. It's just a bull run in a bear market, period. Because my due diligence shows me exactly what I need to know. And that's that our economy is in the toilet. A recession is imminent. And bond yields are screaming via the second worst inversion we've ever had. The only time we've had an inversion in bond yields worse than we currently have is in 1929, right before the Great Depression of the late 1920s and 1930s. Right before the stock market crash of the 1929 is the only time we've had a yield inversion worse than we're currently having. Period. As you can see, AMC is still in the NYSE threshold securities list. We are looking at about 24 days straight now. If you want this list, somebody's asking in the chat. I don't know exactly where you can get it, but if you go to my Twitter, at BossBlunts1, you can just scroll down a little bit and you'll see that I just posted it, earlier this week, a few days ago. I retweeted AMC to Moon. But yeah, if it makes it easier, you can just go to my Twitter, BossBlunts1, scroll down a little bit, and you can get this list of these assholes. Mark them down. Some really unpopular motherfuckers on here. And I'm not entirely surprised to see it, These are the pockets that are paid off. This is our fucking government at work. They are never looking out for you and I. We've got to do that on our own, ladies and gentlemen, and that's why we are working and discussing in this very channel on financial education, and that's why my team and I are bringing to you the first ever stock brokerage for retail by retail. We expect to launch later this year. We will be having a founders program and a beta testing program in which we're offering retail investors the opportunity to invest in the company. Imagine if you would have gotten in on Fidelity or Schwab or something along those lines on the ground floor. If you could have bought shares of Fidelity or Schwab before the company went public, or even better, before the company became a multi-billion-dollar entity. We've currently got thousands of users already signed up, and we will be signing up thousands more in the near future. So if you'd like to learn more, go to litexchange.com, litxchange.com, and you can input your email address, and we will contact you with further information on the beta testing program, the Founders Investment Program, and when we decide to launch in the near future as well. This is a very time-intensive endeavor because getting the correct FINRA licensures and approvals are take a long time. They're very costly, they're very expensive, and it takes a long time. So we have been working very diligently on making this software as absolute high tech as possible. I don't want to spoil all of the fun here. I can't spill the beans just yet, even though that's what I want to do. I'm holding back on telling you guys all the juicy secrets and everything we've been working on here, but I can't just yet, and I shouldn't. So I'm going to save that for updates directly from litexchange.com. If you'd like, just go there, put your email address, and we will definitely be in touch with you. We'll never sell your information in any way. And this is not a solicitation to buy, hold, or sell any securities of any kind. Do me a favor, if you like the information that you've heard so far, drop a fucking like. Feel free to subscribe if you want to. If you don't, no worries there. But drop a like for the algo. Let me know in the comments what you guys are thinking here. You know, I want to know how many shares you've got. Let me know, if you don't mind, how many shares of AMC and APE you have. Because I just told you how many I've got. You know, I've got like 11 point something thousand AMC shares in that one account, and another 6.1 thousand shares of APE. I'm sorry, of AMC in the other account, APE and AMC respectively. Then I've got hundreds and hundreds of call contracts on them both. And retail owns 85% of the float. Drop it in the comments and let me know how much you've got. This isn't a dick measuring contest. This isn't an ego thing. I'm just really curious on what retail is holding. And I think that people will be really interested in seeing what others hold. Because I'm seeing some massive numbers over there. 14,000 shares of AMC, says Joseph. 35,000, says Alex and Gemi. 1,200 and 1,000 of AMC and APE, says Slip. Bliss, 4X's. Nope, 4X's, he says. Ron, 7K. PJ's got 2,500 and 10,000. Gummy's got 4X's of both. Michael as well. Golden has 10K of each. Gary, 3,600 of each. Rudy, 4X's. Johan, 7K AMC, 7.3K APE. 300 call contracts. Damn, Johan. That's a lot of calls, brother. Angelina, 5,000 whopping shares. Evan, 1,000 to 400 shares for each respectively. Damn, you guys. I have a feeling we're going to be so fucking rich. Jerome Powell's going to have to get the fucking money printer out to bail out all these prime brokers after they have to bail out all these short hedge funds and the broker dealers as well. Holy shit. Randy Fong has 45,000 fucking shares of AMC and 45,000 shares of APE. Jesus Christ, my friend, you're going to be a fucking trillionaire. Ahmed's got 14,000 AMC, 7,000 APE, and 5,000 in call contracts. Bravo, man. Bravo. Hope you got a lot of theta on those and you fly by the seat of your pants, my friend. I wish you best of luck. Excuse me. Gummy's also got hundreds call contracts. Damn, Chris, Courier, 20,000 plus this week and 150 plus call contracts. Damn, you guys and girls. These shorts don't stand a fucking chance. Oh, this has been fun, you guys. This has been a blast. Say that again, brother. Say that again. I had to turn the volume up. Fucking thing's breaking up. Holy shit. What sounds that money printer make, bro? What sounds that money printer make? Cash money coming in clutch with Jerome Powell's money printer in hand. Oof, inflation is definitely sticky. Fed's going to raise rates again multiple times this year, guys. I'm almost positive of that. CPI came in at only 3.0% month over month, but that's still massive because it doesn't include housing and it doesn't include energy, which are the top number 1 and 2 expenses of people in the world. Housing and energy. Those are still at like 7.1 and 4.8% respectively, which is absolutely ridiculous. So this is proving to be anything but transitory. The Fed is going to have to continue raising more and more rates without a question, without a doubt. Japan yields hit 9-year high, and the yen is swinging as the Bank of Japan shift roils the market. It sounds about right. Sounds about right. Japan's 10-year yields surge and break above half a percentage point on yield curve control flexibility. Holy shit, look at that. It's a hell of a spike. BOJ adjusts yield curve control, adds flexibility, offers to buy at 1% every business day. Oh my God. How are they ever going to get inflation under control if they're fucking buying up all the bonds themselves? They're a fucking paper tiger. A massive one. It's so bad for them. Another wrongful suspension, probably. TLDR, oh, from Zero Hedge, this is good. The Bank of Japan is too scared to explicitly normalize policy and lift the 10-year yield target. The BOJ is too afraid of blowback if it does nothing with inflation at 3%. So it implicitly raised the 10-year target to 1.0%. And the market is confused by their half-assed measures, which do nothing to tame inflation. That's exactly what I just said. It's not going to help reduce inflation because they've got their foot on the gas and the brake pedal at the same time. So the car's sitting there spinning its fucking wheels, and pretty soon those rubber tires are going to pop. And there's going to be no market left. Holy fuck. This is a global depression that we're going to see in the coming year. We're already in a recession worldwide. But in the coming year, we're going to see a real Great Depression, ladies and gentlemen. The stock market is not indicative of the economy. It always lags behind the economy. Take a look at the crash of 1929, 87, 71, 2016, and now 2022. You know what this means? This is every purple day here is marked with 11 consecutive days of increases in the Dow Jones Industrial Average. Ladies and gentlemen, this country and our economy, the United States and the world, are in the toilet as far as GDP growth and actual economic growth. Economic growth is not there. So for the Dow Jones Industrial Average to now have had, including yesterday and today, 13 consecutive days in the green. And the last time we had over 11-day winning streaks, they were marked on this chart, and it was 1929, 1971, 1987, 2016, and now 2023. Check it out. Donnelly Brent says, regular followers will know that I'm not a big bear porn guy, but I will make an exception for this chart because I had no idea what it was going to look like. He plugged the info into a spreadsheet, and this is what popped out. The Dow Jones Industrial Average on a logarithmic scale since 1920, with purple lines marking the moments when the Dow went up 11 days in a row or more. It's up 13 in a row now. Note the crash of 1929 and 1987 both signaled, which we both just said here, though it took 10 months later for the crash to occur in 1987. 10 months. So it may still take a short while, you know. Look, it took 10 months in 87 and it came a lot faster in 29. But he says specifically, look at how tiny the crash of 1987 looks in context to almost 100 years of mostly raging bull markets. Thanks for the sub. Appreciate you guys. Oh, thanks, Steve-O. Welcome to the channel, my friend. This is absolutely intense. As you know on this channel, we're not perma bears. We're not perma bulls. We ebb and flow with the markets, and the markets are in terrible, terrible shape. The economy is in terrible shape, and eventually the markets will reflect that. But it will take some time. It could be tomorrow, could be a month, could be, 10 months, that kind of thing. But the inevitable is coming. What you're seeing now is a fake out, a bull run fake out to keep people invested in the markets. The reason being because they want people to keep their pensions and 401ks and money invested in the markets, in FANGMAT stocks, blue chips, Facebook, Apple, Netflix, Google, Meta, Tesla, etc., FANGMAT stocks. Because when the stock market crash occurs, institutions will do it in pre-market or after hours when people aren't paying attention. And they're going to leave your pension and 401k and thrift savings plan in their accounts while they pull all of their money out, leaving retail as bag holders. After that occurs, that, my friends, is when I would expect to see personally a real mother of all short squeezes, just like you saw with Volkswagen 30 days after the stock market crash of 2008. It was exactly 30 days later. And for those of you that are unaware, one of the largest LTL trucking companies, less than truckload trucking companies in the entire country of the United States that has over 52,000 truck drivers. 52,000 truck drivers. That's almost 1% of all the truck drivers in the United States. Expected to file bankruptcy on Monday. A Yellow senior vice president told their team on Wednesday that the company would file for bankruptcy this coming Monday. They have ceased operations in many, many, many lanes, and employees were told to take this week off of work on paid leave. You know what else that means? That means that all of those guys, if they get bailed out by the government, every single person is going to be losing their retirement. All of it. All of their retirement. You know what? I should probably go to Lit Exchange's page to pull that up. Yeah, I'll do that. Check this out. How would you react if you found out that all of your pension that you worked 30 plus years for was being taken from you because you needed a bailout? I think you'd be pretty pissed. Lit Exchange posted about this July 22nd, my company, before this was said by the vice president. Yellow Trucking is in need of a bailout for the 5th time. They've already received 4 government bailouts. 4. When a bailout occurs, pensions and 401ks are the first monies to be taken in recompense to the government in exchange for that bailout money. This man just lost 30 years of his pension.
I get emotional. Why you talk like that? That's fine. That's fine. You can do that. You don't know what I'm motherfucking feel. I want my ass off of this motherfucking. Exactly. I've been here 30-something motherfucking years. Yeah, I agree too. 30-something fucking years. You tell me I ain't got no motherfucking pension. Yeah, I agree. Nobody tell me to calm my ass down. Fuck everybody tell me to calm down. God damn it. This is my motherfucking money y'all playing with. You're right, Dwayne. Fuck that shit.
So this is what I'll say.
You gonna tell me how the motherfucking feels. Fuck that shit, man.
So this is what I'll say.
Fuck this shit.
Anytime the government
analyze that.
Anytime the government bails out a corporation or takes some.
That's hard to listen to. That's hard. You hear that fucking poor guy? 30 years of his life. Everything he was expecting to get for retirement is now gone. Whether they get a bailout or not, that money is gone. So I'll leave you with that. Don't let the fake bull run fool you, ladies and gentlemen, because the stock market and Jim Cramer and mainstream media are there to make you the bag holder. Do your own due diligence. Look into the yield curve. Look into what's happening with real estate around the country. Look at what's happening with foreclosures. Look at cars and car notes and the rejections in car notes. Look what's happening in trucking and shipping and the number of trucking companies that are going out of business. Keep looking. The signs are everywhere. I'll leave you with that. Our next video will be about macroeconomics and doing a deep dive into all the issues that we're currently seeing in this country. We'll do that early next week, and then we'll follow up next week as well with another weekly recap on AMC and other meme stocks. And if we're in luck, maybe we'll also have Dr. Marco Metzler and another surprise guest that I'm working on getting on the channel as well, who is a silver guru, to say the least. Because precious metals, my friend, that's real money. Do your own due diligence. Make sure you're properly hedged. Act accordingly. Oh, and in case it wasn't clear, we're going to be so fucking rich, you're not going to know what to do with yourself. Holy shit. You're calling in rich, motherfuckers. Have a great day, my friends. Have a happy Friday. I'll catch you guys tomorrow. Hopefully something interesting happens, and I'll jump right back on for tomorrow. But now look at that. Lego Pickle Snake in the Discord sharing his real money, a.k.a. pure silver, 0.999 ounce, 1 troy ounce. Love it. From Highcroft Mining Corporation in partnership with AMC Entertainment. Damn. Thank you, my friends. Johan, Gino, Mike, CRX, Jesse, Ricky, Kershaw. I see you all. I appreciate you. Thank you very much for your support. You guys have a great rest of your day. Old Yeller's gonna get my fucking money. Oh, Samony, yeah, I'll ask Wolfie to come back on. He's available again, and he'll probably be. I'll drag him by the arm and make him join us on the next stream. All right, look out, be on the lookout for Wolfie. I'm gonna drag him by the fucking arm and make him join us. You guys have a great evening.